Welcome back, traders, to Trader Roundup, where like-minded, highly attuned traders come together to become 1% stronger each and every day. And today I'm excited to introduce you all to my good friend Ken Chigbo, who finesses the fundamental landscape in the markets, and the way he articulates his fundamental analysis, his content is electrifying, and I'm very honored to introduce you to Ken. And what we're going to be discussing today is what his perspective is with psychology, mindset, and his approach to process, how he learns from mistakes. So definitely looking forward to this one. Just having a little bit of technical issues with Ken at the moment. Let's get him on in a minute. So those who are tuning in live, we're going to go into topic first, and then we are going to be going through a Q&A. Oh, there he is. He's popped up. Hey.
How you doing?
Yeah, very good. Very good. Good to see you.
Awesome.
It's an honor to have you on Trader Roundup.
No, likewise. Thank you very much for having me on board, bro. Long time coming.
It's a long time coming. Yeah, we spoke quite a few months, perhaps maybe a couple of years ago. I think you were in Dubai at the time. So a lot has happened since. So if you could please introduce yourself to the Trader Roundup audience, tell us about your story, your journey, and then we can get into topic.
Yeah, definitely. So yeah, guys, my name's Ken Chigbo. I'll give you just a sort of brief, sort of put my background into a nutshell, if you like. I was supposed to go to university, like a lot of people today, but I ended up missing university by sort of one grade. I needed grade for my desired university. It was a bit of a panicky situation because my family, well, my dad's side particularly, are sort of African heritage, Nigerian. So having education is a big part of our, our culture and our family, having degrees. So obviously at that point, I felt like a bit of a failure. Prior to that, just to sort of go back in time a little bit, every summer holiday that I had, I managed to get an opportunity. Well, saying I managed to get an opportunity, my mum actually worked as an accountant on a trading floor in London, which was at the time was known as Schneider Trading. They're taken over. I don't know if they're still running today, but they're taken over by a company called Marex. And it's just a traditional proprietary trading floor in London. So my mum gave me an opportunity, or sort of handed me the way and the right people to become like a runner. So essentially a T-boy. So for all these traders on the trade floor, they were trading fixed income. So there was an old trading system back in the day called TT, like ladders. I don't know if people still use it today, but I was seeing all these prices flickering on the screen. I didn't know what was going on, but I liked it. I liked the passion and the energy these traders had at the screens, and just seeing them make money. I didn't know what they were doing, but it sort of it excited me. So anyway, I did that every sort of summer holiday. I started to learn, like speak to all these traders, understand what they were doing sort of day to day. Any opportunity that I had, I was very tenacious. So after a little bit of time, I did that from the age of 16 right up until, as I say, to my A levels, and obviously I missed. And then I got on the phone to the people that I was doing that running for, and said, "Look, is there an opportunity for me to come in? I'm happy to just come in just as I've been doing, just as a T-boy full time." So I did that for a couple of months. I caught the attention of some analysts that were in the corner. They had an office in the corner in this trade floor known as Ranscork. And their role was they were like a radio service for these traders. So back in the day, trading the news was so key. You had to have your finger on the pulse.
Yeah.
These guys were feeding that information. They gave me an opportunity to come in as an analyst. I came in as a junior, almost messed up my opportunity, but sort of quickly started to learn the ropes. Went from analyst for a few years, went into foreign exchange broking, looking after companies that are doing millions in foreign exchange, their exposure. And then after that, I decided to leave the corporate world and then went into the beautiful world of trading. And obviously here we are today.
Wow, wow, what experience. Like, that has been such an amazing journey. And I recently watched your podcast with Riz at Words of Wisdom, and so you go into a little bit more detail during throughout that journey, and you know, this through that journey, what I'm quite curious about is how you overcame those the mental challenges, because that was that T, you said T boy, right?
Mhm.
Is that an actual position, or did you have, what was the position called?
It's actually a position. It's called a runner.
A
So you're a
runner,
runner.
runner.
Like
Okay.
you are effectively, as the title is, you're running around, like
Yeah,
responding to traders' needs, their wants and needs.
yeah. Okay. So as a runner, as a T boy, aka T boy, yeah.
Yeah.
What, and obviously very quickly you had a passion for trading. You saw what was going on, and you were drawn to it, right? But what was that transition like, and what sort of mental hurdles were going through at the time? Because obviously it's a very competitive job. You know, if you get it wrong, it's very cutthroat, is what I'm trying to say. How did you overcome those mental hurdles back then
As a runner.
as a runner? Yeah.
In what sort of aspects?
So, for example, when you went from runner to analyst, that's
Yeah.
quite. I think that transition there is a big opportunity. Like those, obviously, you had to build trust amongst the traders, amongst your seniors. You know, for you personally, what did you struggle with?
So for me, there's a few things. I wasn't academic in any sense. Like I don't know whether over the years I've been doing a bit of research into it, into ADHD, and
Mm,
to some extent, I feel like I have a lot of traits that someone with ADHD would have in
mhm,
terms of more specifically my lack of concentration. Believe it or
mm,
not, it takes me a lot to get into the zone. So with that, just wasn't great academically. It took a lot of um, basically whipping, from teachers, from my dad, actual whipping, with a belt, to try and ingrain that discipline in me, to try and get me to focus, because that was a difficulty. Just being able to focus on something. So
mm.
for me, obviously, as a runner, obviously, yes, I'm running from place to place to get people's lunches and dinners and dry cleaning and all that. But I wasn't really challenged, mentally, academically, to sit there and focus on something. So when I came in to become obviously an analyst as a junior, and this is where I said I almost messed it up, because where I struggle to just academically, and I just combust when I'm given this data or I need to learn something. It takes me a bit of extra time to do that, to get into the zone. Now I have tricks and to get into the zone quicker, but back
Okay.
then I didn't. So I was given a test, for example, on my first test was to understand monetary policy, because it's a big part of influencing the assets that we're trading. And they gave
Yeah.
me, the Bank of England members to learn, the FOMC members and ECB members, revise who the voting members are, because it's important when they speak. And basically, I had them written down on a piece of paper, all the members. And then when I went into the room, into the meeting rooms to the exam,
Yeah.
I cheated. I cheated, and I started looking at my paper, because I just was combusting inside, just because I
Wow.
struggled to just get into the zone. And and it wasn't. I did take it seriously, but it was difficult for me to
Yeah.
lock in.
Yeah.
So I tried to go to the shortcut, and that's something that my teachers over the years at school
Mm.
always said to me was a problem of mine. Ken's always looking for shortcuts, the easy way. Obviously there's ways of working smart, but I was just trying to shortcut everything and just do the bare minimum,
Yeah.
rather than putting in that hard work, that hard and smart work. Just always trying to do the minimum. So that was a big challenge
I
for
was
me.
exactly the same.
Yeah,
Exactly the
yeah.
same.
So yeah, and then obviously the discipline aspect. Like I just wasn't used to coming in, like my role every day. I had to be in before 6 a.m. and then I'd leave
Mm.
after 6 p.m. It's a long day. So I didn't really have a lot of discipline, even coming from school, because I struggled at school as well with my behavior, not in a sense of being a delinquent youth, but in the sense of concentration. And then when I lose concentration, I'm distracting other people. I'm the class clown, So
Yeah, yeah.
having to deal with the aspect of discipline and be regimented was a struggle for me. But and
Mm,
that's what I said. It took, even in that role where I almost lost my opportunity there, on a couple of occasions because of the lack of discipline. So I had to quickly learn it, and learn it the hard way of ultimatums, essentially. And that's what my life has been, sort of at that immature period, or that, the infancy of
mm.
being a school kid, right up until very early teens, just failing to have discipline and be regimented and own responsibility.
I think you hit something right there in the fact that you gave yourself an ultimatum. And I think a lot of traders, as they're developing, they lack the consistency, they lack the discipline. Perhaps maybe they didn't learn that in school. Their parents perhaps didn't teach them discipline. Discipline is something that needs to be taught and something that needs to be repeated for some time. So I think the fact that you gave yourself that ultimatum, and in fact, do you still feel like you have that ultimatum now? As in, like, is that what's keeping you sharp, disciplined, consistent? That mindset of always having that ultimatum.
Yeah, definitely, bro. It's one of those. I'm so well regimented now in terms of my routine and what I do, because I've learned from the hard way. I've learned from potentially almost missing out on opportunities, or even missing out on opportunities because of
Mm-hmm.
the lack of organization, being an erratic person, not having any control over my life. I've seen how many opportunities and how much that's cost me. So I always put myself in a place of always coming prepared, and for every single day. And I don't take my experience now for granted. I've always got my finger on the pulse, and I stick to my routine, my structure of things.
And what kind of tools do you have in order to keep you structured? Like what software, technology, what kind of tools do you use to actually keep that regimented routine?
I don't use any software or anything like that. It's come down to just work. For example, waking up. I wake up early every day. I just have a routine in life. My alarms, set for 5:30. Sometimes if I get a late night, then it's 6 a.m. Then I'm
Mm,
up. I'm up having a cold shower. I'm heading to the gym, and then I'm coming back. I'm having my black coffee. I'm reading the news, what's coming out. I'm positioning myself for the day ahead.
mhm.
So it's just sort of experience and finding out what works for me. I don't rely on any sort of technology on that front at all. Technology, lets you down at times. So I like to have control over everything. So it's just about
Uh-huh.
setting that sort of strict regimen in place for me.
And do you find that your attention still gets distracted and diverted even now?
Yes, sometimes when I'm reading, the news in the morning, I'm trying to digest. It just takes one thing, to distract me, and then I'm diving into a whole realm of things that I shouldn't even be looking at, or shouldn't even be reading. And
Mm,
to be honest, there isn't really a quick fix of getting out of that. It's just establishing, okay, now I've just got lost in the source of reading something else. So I still struggle with that to this day.
yeah, I
But
think we all do.
yeah,
I think we all do. I mean, like, sometimes I got way too many tabs. I've got my phone going off. I've got chats. It's insane the amount of information and data that's coming our way. And as a trader, especially with something like fundamentals, where the the devil's in the details, right?
definitely, definitely,
And you have to sort of go through all of this information and then try and figure out, right, what is my bias based on this information.
exactly,
But
exactly.
yeah, go on.
No, I was just going to say, for me, obviously, I like to clock watch when I am obviously preparing my day ahead and my data. And I always
Mm,
think, like, one of the big things for me, you're saying, do you rely on technology? And no, for me, it's like, as the saying goes, the early bird catches a worm. There's been so many times when I've learned from my lesson where I haven't got up in time to digest, what's going on, what's happening today, what's the theme today, what's going on in the news. There's been so many times where I've just been a little bit slack and lost that discipline in the sense of getting up early and missing out on catching the worm. So it's staying on top of that and constantly reminding yourself that if you're not getting up, if you're not staying ahead of the game, you're going to get left behind. You're going to miss out on these opportunities. Yes, there's plenty more, but
And one thing that you've managed to do successfully for yourself is being able to interpret all that data, all the fundamentals, all the technicals, in order to generate a trading idea. And of course, that comes with its own challenges. But you've also been able to do it as a mentor, as an educator, to be able to actually help others in their quest to profitability, in their quest to understand the fundamentals. That is quite impressive, because you have to be able to articulate that information and be able to teach it.
Definitely.
So as an educator, what are your sort of processes when it comes to making sure that that information is sharp, and how does that impact your own trading?
Yeah, so I mean, through the years, obviously, it's being an analyst on the front line of digesting all this information. One of the things for me was that everything is so catered towards the polished professional. The guys come out of Cambridge, or the guy that's over at JP Morgan or Goldman Sachs or whatever. And that was one thing that really infuriated me, because, as I said, I haven't been an academic person through my years. Obviously, when I apply, I'm good. But just even during my time as an analyst, I found it so frustrating to try and understand information. There's times when I'm just sitting there at the screen like this, like losing my SHIT. So just getting onto the point and answering the question is, I found a way to be able to digest this information and then try and make it understandable. My goal, my mission, my purpose, when I'd learned all this fundamental knowledge, was, how do I make this understandable for my mum? How do I make this understandable for my younger brother? That's the level I want to break it down and give it to these people, so that these big buggers in the banks and in their suits are not just the ones taking advantage. So my thing is just making things simple, cleaning up all the noise and all the unnecessary jargon, and breaking it down for the everyday person. That's my approach all the time, whether it's fundamental or whether it's technical. Let's just make it simple for people to understand. As the saying goes, keep it simple, stupid. So that's what I've always got in my mind is the number one thing.
Because I've been following you for some time, in fact, I've been following you for a few years, and I enjoy your content, and I've actually learned as to how you do it. And what I realized over these years is that not only are you a trader, but you're also an artist. So there's this creativity aspect to what you do, because to be able to gather that information and then in your own creative way articulate it to sort of layman terms, or for others to understand it, that requires creativity. So how do you view creativity in what you do, in your trading, in your education, in your content? Like what kind of sort of I guess mental processes do you use for that creativity?
That's a really, really good question.
That's deep right there. Because it's true. I see you as an artist. I mean, and how you interpret that data, I find it, wow, that's pretty amazing. Have you ever seen yourself as an artist?
No, bro, I haven't. But I've come from a background where, like through school, one thing that I really thrived at, obviously, as I say, I wasn't the most academic person, but one thing I thrived at was drama. And obviously, in drama, one of my things that I was so good at was when, I can't remember what it was, but it was this this exercise that we used to do. It was about improvisation. And like so you'd come in, you'd start a scene of something, like whether it's you come in on your own and you start something, like a little monologue, and you're talking about whatever, or some people are already in and you come in, you have to think on the spot and improvise, to try and set, carry on this scene, this acting scene. So I think like that through school has somewhat helped me, you know, to this day in terms of
Yeah.
being creative, trying to think, trying to improvise. At times we have to improvise, you know, or think of the spot. There's times when you know, we get, for example, like a fundamental a rate decision, a central bank decision, and there are times I may have a view, but my view was wrong, and I had a particular scenario for my view of how I wanted to attack the market. But then I have to improvise. You know, I have to improvise, and okay, now the market's not moving how I intended. Let me adjust my plan and my approach here, and obviously try and improvise and go with the flow, and obviously change my setup. So I think that probably helps me in terms of being creative, just
I
learning
think
how
so.
to
I think
improvise.
so too. I think so too, because the way I've always seen trading and to approach it, you got to approach it as both a scientist and an artist, because again, you need that creativity. You need to figure out how to interpret what you're seeing, whether it be fundamentals or technicals, because there is a science to it. But at the same time, you got to be creative, you got to be adaptable, you got to be agile, and I guess it's those early skills that you developed in drama, which you are, you know, you're able to think on your feet, I guess. And I guess that environment that you developed as a trader, and especially as an analyst with real traders, you know, professional individuals that do this day in and day out, I think it's forged who you are today. And it's awesome, man. It's pretty impressive. And what and there's not that many traders out there, or people that are articulating fundamentals the way you are, because like you said, it's when it comes to fundamentals, it's all these sort of institutional guys with institutional language that not everyone understands. But it's so, like, the macro and the fundamentals are so important to the markets. It's
They
like
really are.
it's and understanding the macro, it does actually give you an edge, and I've seen it firsthand.
Yeah,
So
100.
in terms of, like, what do you think is what do you think are some of the things that are holding traders back when it comes to their mental edge, like, based on your experience and how you interact with the community?
Yeah. So, well, it's endless. One of the things for me is, you know, as humans, we just have a natural tendency to want to seek control, you know, over circumstances. And trading is obviously no exception. Like the markets, what people got to remember as well is the markets are inherently unpredictable. Even for someone like me, I can have a level of degree of understanding sort of fundamentally and apply that into my technicals. But you know, attempting to control every aspect of what the market, every aspect of the trade that you've got exposed to, just leads to so much frustration and stress. Like a trader will learn a strategy, and that, you know, they'll see it's working for their mentor or someone else, but then they forget that the markets can be unpredictable. So there may be times that strategy, that methodology that they've learned, is just not going through. You know, it's just not being worked very well in the current market cycle. You know, there may be a string of losses. You know, so you have to acknowledge that limits of your control, and sorry, that you know, just focus on what you can control, and what you can control is getting your methodology right. That must be the number one thing. I say, have faith in your methodology, how you approach the market. Reason being, because when we do go through these losing streaks, and obviously that's a big psychological aspect to deal with in trading, when we're losing, and how we handle those losses, and not start chopping and changing into other strategies, or start chasing after our losses. So build ultimate faith, and not egotistical faith in your strategy, but build ultimate faith in your strategy, where you know that you're not obsessing over each individual trade. You're not obsessing over it in the sense of, okay, it's at a loss. You know, you have faith in the sense of that over time, in the month, in the quarter, over the year, your methodology is still going to be profitable, regardless of these little small cycles of things going against you. So I think that's number one thing. Stop over-seeking control over individual trades, but instead build faith in your methodology of what you can control, as the first point. Obviously, once you've built a methodology, you have a clear plan, right? It's still, even when you have a plan, like I've given people excellent plans to stick to, you know, in terms of specific trading hours, you know, your specific instrument that you're trading, you know, how many confluences you look for, but they will still deviate outside of that plan because it's just, it goes greater than having a piece of paper with a plan on it, or having it on your computer, or having post-its. It goes well and truly beyond that trading. You know, we can't just rely on a a perfect trading plan and think that's going to work for us. No, you know, is more to it on that aspect. You got to really work on yourself, you know, first of all, as a trader. I did it backwards. So I was a very erratic person in life in general as well. I make very irrational decisions, emotional decisions, you know, in life in general. You know, if a situation happened, I'm just acting impulsively and doing the thing that I shouldn't do. And then later on, I'll go and regret it. You know, damn right regret it. I had a situation recently, you know, just speaking personally, where I was letting my friend know. I was just like, look, you know, I've really improved just in terms of like in life, in terms of being rational, because you know, my neighbor next door, for example, we had a situation where, you know, he was blocking my being in front of my garage door where my car comes out. And I had to go over there and speak to him. Like years ago, I'd go over there like with an iron fist and just be like, what the, swearing and blinding. And then I know I'd regret that after. So I went over there and spoke to him, you know, calm, collective, rational, and was the bigger man about things. And, you know, I think he obviously, he respected the way I spoke to him, and he felt like an idiot. You know, but I handled things correctly. I allowed myself that time to be calm and collective and think about how I'm going to approach this situation from a rational perspective. And that goes the same as how I deal with my children, how I deal with my partner in certain situations. So it's try and get your life, your life right first. If you can get these things right, then it's going to serve you well in trading. But if you go backwards like I did, fine, you know, but trading really does, you know, the life lessons are so applicable to trading.
Absolutely. I
Well,
think
a massive sort of tangent.
I think we all get it wrong. To be honest, we all get it backwards. We all are very impulsive, and it's just that the stages of brain development, and it's that a lot of the time I find that there's this stage, and I'm trying to think back of what I remember learning in psychology. There's this egotistical stage, and this egotistical stage it happens in during child development period, and after that, once you you can transcend from this egotistical stage to a more a state of thinking and being where it's more inclusive of others. That sort of more empathy comes in, and collaboration comes in, and you're able to get out of your own ego, if that makes sense, right? But what I find is that most adults, they don't move away from this egotistical stage. And so you said something really powerful, and it's having these expectations. And when the market doesn't go your way, what happens? Ego comes out and is not having it. Ego is like, no, I was right, I am right, and I'm gonna get my money back. And then bam, traders go into self-sabotage, they tilt, and they want to fulfill that expectation, and so they start revenge trading. And we've all been there, but some
Definitely.
of us have transcended past this egotistical stage. It comes out sometimes, but just like that example you had with your neighbor, there's still that sort of ego in there, right? That you know you're still holding back that silverback gorilla, right? About to go nuts on the guy,
Of
right?
course.
But you know, you gathered yourself, you had a strategy, you had a plan, and you stuck to it, and then you executed it.
That's it.
And a lot of the time, traders, they haven't transcended past their own ego, so it just trips them up. And like you said, if those listening to this, like you gotta, yeah, like Ken said, you gotta get your life in order, and that means transcending past this ego, transcending past these expectations of being in control of an uncontrollable outcome.
Definitely.
But what we can control is the controllable, which is the system,
That's it. That's
the
it.
processes, the routines, right? Our response. to what we see and all the information that we get. You know,
Definitely.
these are so important, and I'm really glad you mentioned these, Ken, because a lot of the traders they need to hear this.
They
They
do.
do.
They do. I just
Uh,
want to say something actually, just because you said, about ego, and obviously one of the big things um, in trading is obviously at the end of the day we manage our risk and we control our losses, and at times our ego is just so bloody big, and it just doesn't allow us to just accept that we got this trade wrong, and just move on to next. Like it's loss aversion. You're trying to avert this loss that's inevitable. And I call it like some sort of powerful psychological phenomenon. It causes an individual to feel pain of losses more acutely than the pleasure of gains. And then the
yes.
trader ends up holding on to losing positions for so long, hoping that they'll eventually turn profitable. They don't want to, allow the ego to just, to accept the loss and close it, even when all evidence points to the contrary. So it's being able to swallow your ego, because your ego is tiny. It's a little speck of dust compared to how big this market is. So swallow that
Yeah.
ego and just accept the concept of cutting a loss, and instead letting profits run. That should be a fundamental principle when it comes to trading. You cut those losses, you allow those winners to run.
100%.
Yeah.
Love that. I love that. So we're joined by a special guest. What's going on?
Hey guys, can you hear me?
Yeah.
How you doing?
Good, man. How's everyone doing?
Good.
We're having fun, man. We're talking about ego. We're touched on expectations as a trader. So it's good to have you. I know you guys have met already, right? Where was that? What happened? I want to hear the what went down, man.
Ken, where did you start?
Miami, baby.
Miami. Yeah.
Oh, okay.
Yeah.
What happened in Miami stays in Miami, or we can share, yeah?
I mean, that's the saying, right? But yeah, I'm sorry about the noise. I'm in a coffee shop, so there's quite a bit of noise at the moment.
Okay. So yeah, how did you guys meet, and yeah, what's the lowdown, man?
Ken, you want me to go?
Yeah, go on, Ums.
Yeah, so I mean, look, for me personally, I've always followed Ken, right, since the beginning of my trading journey. It's only in Miami where I actually really met him for the first time in person. And, I told him everything of like how I still look up to him, but, how I started looking up to him from the beginning of my journey and everything that he used to put out and, all the value he's put out from the very beginning. So the fact that I got to meet him and then we got along, and then we also have a mutual friend as well, which is actually one of Ken's very good friends. So we just got connecting, and just energy. The energy was just so pure, and yeah, I just loved just being in that space, to be honest.
Love that. Yeah, no, Ken's energy, man. Where did you get this energy from, bro?
It's a good question. I don't know. My mum's Italian, right? So like Italians are crazy. So I'm guessing it's from there.
Boy, Italians love their caffeine as well. So
yeah, they do.
cheers to that, bro.
Yeah, man. I think it's that mix of Italian and Nigerian together. It's like the perfect combination, it seems like.
Crazy mix.
Yeah, man. Ken, I had a question for you though,
Go on.
which I think would be quite useful for everyone that will tune in later on as well and watch this recording, right?
Yeah.
So obviously you don't need to be told that you're the fundamental king in the game, right? Like that's just a fact. but my question is more so like, so a lot of people focus on the technicals, right? Now, of course, fundamentals is a very big part of trading, which, to be honest, most of us neglect, and I've been guilty of that as well in the past, right? What would your advice be to new traders, and even, let's just say traders that have come along their journey a little bit, but still aren't completely there where they need to be, in terms of how can they sort of manage technicals and fundamentals together, and like what's the best way for them to do so, in terms of, you know, like the focus areas of, okay, technical is great, there's so many different ways to analyze the charts, right? But then where does fundamentals come in exactly, and how would you position that for like the average Joe to understand?
Yeah, no, it's a good question, bro. Yeah, so for me, like the main starting point for people would be, you know, your common ones such as CNBC, Bloomberg, Reuters. These like news websites, essentially, they will write nice little summary pieces. It's changed now. It's a little bit better. So they'll write nice summary pieces on, you know, the talking points in the market. Like, for example, everyone knows right now, this week, we've got, you know, the central bank, the FOMC rate decision. And it's like understanding, reading what these guys are writing about. So what are they expecting for the dollar? For example, or what are these guys are talking about, or you know, whether it's about inflation. You know, inflation's over the years had been rising, and that's something that had been driving gold to the upside because gold's a hedge against inflation. So it's basically reading all these little summary pieces. Anything that you don't understand within those summary pieces, type it into Investopedia or type it into YouTube to get an understanding of it. Because what you'll notice is, for example, Bloomberg, CNBC, Reuters, all these financial news outlets will all be talking about the same thing. Now, when they're talking about the same thing, that means there's a theme in the market. And it's really important that you stay on top of that theme because themes are what, like in technicals, we have trends, we have market structure out of where you know, an asset is trending to the upside or to the downside. A theme will be have an underlying influence on that structure, you know. So you know, over the years, I'm just picking one off my head now, where we had Brexit, and Brexit was massively weighing on the pound, you know, years ago. And every technical pullback that we saw for the pound, the theme of Brexit and the negative theme around that was forcing that technical pullback or that rally for the pound to be sold, you know, because the theme was bearish, the theme was negative. So it's just to sort of come back to your question, it's understanding what all these papers are talking about, what all these news outlets talking about. Anything that you don't understand, get it summarized in Investopedia, and then try and formulate a view yourself. And what you'll notice, for example, sometimes the press will push certain biases towards you, like for you to interpret. They'll push biases, but then at times it comes down to you collecting a few different biases and formulating your own. You know, it's just like how you'd have a technical bias. Just form a bias. If it ties in with your technicals, man, that's fantastic. That's what you ideally want, where you've got a fundamental view and a technical view, and then you've got, you know, you're set off to trade. So start off with the major press outlets first. Yeah.
Okay, that's an amazing answer. I think one thing on that though, right, is that what I tend to see when I'm looking at news, a lot of the time is there's a lot of manipulation. So do you ever get that where you have a certain bias, but then something happens in the market and you're like, what? Wait a minute, that's not what I was understanding, and you know, etc. Do you ever fall into that trap, or previously did you ever fall into that trap?
Yeah, definitely. I think for me, right, when I've seen times of things like that happening, and for example, you've got a view, the market's got a view of how things that happen. For me personally, I don't know about you if you've sort of dived deep into when that happens, but a lot of the times situations like that happen when things are priced in. So, for example, this week I've gone sort of against the grain because everyone's expecting the FOMC to pause at their next rate decision, expecting a hike by 25 basis points. So it's largely priced in. The markets are expecting for the FOMC to hike by 25, but then they pause at the next decision. That's massively priced in. So where that's priced in, you need to see something completely outside of that for the dollar to carry on selling. So I said I was sort of going against the grain where that's been priced in, and a few other factors. I expect the dollar to move the other way, opposite to what the markets are expecting, opposite to what the retail guys expect, the most retail guys are expecting, because it's priced in, you know. So maybe that's what you've seen potentially is manipulation, where something comes out and it's as you thought it would be, but it's gone the other way just because the markets want more. They want more, you know, of whatever it is you're looking for, you know, in that sense.
And when it comes to data, how, in your opinion or experience, how much of that data is actually I guess, accessible for these bigger players, right? How is there that type of manipulation where some big players have access to that data before the market? How does that work? Is it based literally within seconds they get the information? Because I've seen on the lower time frames, like I'm talking maybe the 30-second time frame, where before, even if it's like 1 minute, sometimes even up to 3 minutes before the data release, there's action. Like it's just, and it's usually the first move in that 30-second candle is usually like that's the direction that it goes to. So yeah, in your experience, does this happen?
Yeah, people still, institutions still get data beforehand. There's so much insider trading going on in the world. I've seen it, firsthand, without incriminating myself, as I've probably done before. Hey, but yeah, people get hold of data early. Institutions got their plugs in essence. But look, how I see it now is I don't care about trying to get in straight away on the back of that news release. No, what I do is I'll compile all this data, because this data will then create a new theme for the markets. Like now on the back of the FOMC, I'm not gonna, if I have positions open, fine, but I'm not gonna start jumping in on the back of trying to be really quick to react to the news. No. I allow the market to settle, because there's gonna be a theme implemented, whether the dollar's gonna carry on trending to the downside or whether we're gonna see it pushing to the upside. So I wait for things to calm down. I don't get in all that noise, because you could potentially just get stopped out anyway, where it moves aggressively one side and then goes the other way. So just digest it, allow that noise to calm down, and then go in with whatever you sort of forecasting. Yeah.
And you're using supply and demand, classic supply and demand?
Yeah, classic supply and demand for me. So I've literally just got my major zones marked up. I validate them, in terms of like actually marking on the zones. Everything's like, I say it all the time without sounding like a broken record. Everything's subjective. So you find what works for you. Like for me, valid zones, I draw up my zones, on a daily chart. And valid zones for me are just looking left and seeing that this zone has acted quite significantly as both supply and demand, as support and resistance. And I find that valid, and you can see it by looking left. You'll see, if you've marked up a zone, you'll see the price, the candlestick may have pushed through, it's retested it, and now it's acting as new support, and then it carries on moving to the upside into the next zone, sort of zone to zone. And then for me, like when I am trading supply and demand zones as well, obviously I've got my fundamental confidences as well. But then I'm looking to how the price responds in that zone. I'm dropping down to my 4 hours. I'm looking at, candlestick behaviors, whether we're seeing sort of certain dojis form in there, bullish engulfing, all of that, so I use candlesticks as well within my zones.
So I got a question in regards to market psychology. So as a trader, I find that I find that the traders that have the most success are usually contrarian. And you mentioned something earlier about you're expecting, even though you're expecting a certain result this week, you're expecting price to do something else because it's already priced in, right? So in a way, you are being a contrarian. Now, what does that say about the market as a whole? Because some of these players who actually have a direct impact on price, I mean, they've got a lot of capital. They have a lot of access to more information, software, tools, AI. Why is it, do you think that even these institutional guys, are they still referred to as dumb money? Do they still make these mistakes? And I'm referring a little bit to the herd effect as well. So what's your opinion on this sort of concept of overall market psychology when it comes to the fundamentals?
Well, like the sheep get eaten, in the sense of, when I say the sheep get eaten, I'm talking, as I say, with people, when people get really overconsumed and sucked into what the expectation is, and and they forget that these things are priced in. That's where the sheep get eaten, and that's where the big boys or the smart guys will make where they make their money. We have to have these big amount of losers, all these people that are the trades going against them, and then on the other side we be the winners. So you need to sometimes think about things. It can't be as easy as, oh, this is expected, this is how, you know, the currency or the asset class is going to trade. You need to think on the contrary as well. You need to think a little bit outside of the box. Okay, this is priced in now. Are we going? Everyone's expecting it. Are we really going to move in that direction? You know, probably not. You know, if it's expected, markets with markets, they always want more. So if we're expecting something and it's priced in, they need to see more for it to move in that expected direction, if that makes sense. So it's think about that. Keep traders need to think about that in their minds. You know, don't be the sheep, you know, and following the mass, because the mass, you know, the sheep get eaten. You know.
And what does it mean in the famous saying, "Don't fight the Fed"? What does that actually mean?
Don't fight the Fed.
Yeah,
I actually don't know. I know.
You should know this, man.
I don't know.
So, because when I was into the fundamentals,
yeah,
and I'll be hearing Jerome Powell, you know, our good old pal JP, he, in terms of what he would say, the wording that he would choose really determines, especially like the forward thinking stuff, right? That really determines how price is moved in the following period, in the short term, because as you said, you know, like a rate hike, it's already priced in. So when JP goes on the mic and he starts speaking, the market is more interested in what the forward thinking is. That's right. Correct. So with that, you know, in terms of what I meant, as in like, don't fight the Fed, do you still trade? Do you still find trading ideas based on your own bias, or do you adapt to what, let's say, someone like JP is saying when it comes to forward guidance?
Bro, to be honest, I've noticed over the years, right? And you say don't fight the Fed, but I've seen it in so many occasions, especially like years ago when we go back to the previous Fed chair, which was Janet Yellen. The markets bully the Fed. You know, the markets position whatever they want, you know, what they want. And sometimes the Fed, because the markets have moved such in a certain direction, that the Fed has to bow down and kind of, you know, they may have to maneuver a little bit, believe it or not, behind the scenes, because if they go and do, you know, something outside of what the markets are expecting, they can cause a shitstorm, you know, and stocks sell off massively, and, you know, companies then lose a lot of money and people lose jobs. Like, sometimes the markets are in control. You know, the big boys are in control because they're positioned for a certain outcome, and that's what they want. So, you know, when Jerome Powell speaks, in terms of obviously at the statement, what you were talking about in terms of obviously thereafter forward guidance, essentially, yes, I cling on that, but I see how the markets will interpret a decision, you know, differently to maybe how Jerome Powell had said it out in his head. You know, they will pick the report, every single word, to pieces, and they'll run with whatever they want to run with. You know, and it comes down to who has the most money, you know, in the sense of, you know, say, for example, Bank of America deemed the FOMC rate decision to be hawkish, even though Jerome Powell just said a freaking dovish statement. But they'll cling on to one thing and then they'll start driving it. They'll shift buy dollar. And then other people will have no choice but to have to join in on that move. And then the trend starts setting, even though that it probably wasn't even a hawkish statement. So, yeah, I see how the markets respond to it, how they interpret it. Obviously, I have an interpretation, but I see how the markets start positioning for it. And you don't usually get that until like the day after, maybe maybe even late Asian trading from Wednesday, you know, late Asian trading for early hours Thursday. And then Thursday, you'll start to see the way the markets have interpreted it.
I see.
Yeah.
So in a way, it's so subjective, especially during these speeches, these data releases. It's so subjective that you're better off, and in your experience, there is more of an edge and more, I guess, at that anticipation of the likelihood of price going a certain way once the dust settles, essentially.
Yes, definitely, bro.
What I like about this approach is that, because I've tried trading the news, I've tried all of that. I mean, back in the day, I mean, I'm talking between 2014 2016, trading NFP was like easy money. It was literally so easy. And I know you were active in those days because I've seen you've been involved in markets for a long time. But yeah, eventually that stopped working. Trading NFP was not easy at all. And then what I found is that when it comes to trading fundamentals, you gotta be, like you said, wait for the dust to settle, because it's a lot healthier for your mental capital. Because when all that action is happening, you hear, you got the squawk going on, or you've got Twitter, whatever, you've got all these opinions from different traders. You've got JP like listening to what he's trying to say, trying to interpret all that information. It is just so much noise that it makes sometimes a very simple decision so complex. And I found that when I was trading fundamentals, I was getting really confused and then frustrated, because then whatever decision you make is going to be wrong when I try to trade fundamentals. So what I done eventually was I just look at sort of more macro and more of a bigger sort of, I compare central policy between two central banks. I just look which currency will potentially be stronger, which currency would potentially be weaker, and then I'll have a bit more of a bias towards that if price action confirms it. So for me, price action is king. So, but I still have, because I have a quite okay understanding of the fundamentals. I found that I had to do an 80-20 elimination. I had to literally cut out so much, and a lot of that was the fundamentals.
Right.
And now I'm predominantly technical, predominantly price action. And I think from a psychological perspective, it just keeps me sane. So how do you remain sane, especially with the fundamentals, with so many variables? How do you remain sane?
It's a good point. To be honest, I cut out the noise. I have a lot of discipline to cut out a lot of the noise. Once I have enough reasons, I don't care what anyone else is saying. I stick to my view because it's going to go either way anyway. I'm either going to get it wrong or I'm going to get it right. I don't really sort of care in that sense. There's plenty of opportunities to come. I think sort of I'm deviating a little bit away here just a moment, because I just wanted to mention how, obviously in trading, everything is very fast paced. And I just wanted to just take it back a minute just to, like we were just discussing about letting the dust settle and all that. People are very quick when it comes to trading, especially the new guys, right? The guys that have been trading for a year or two, you understand. But like in this fast paced world of trading, and a lot of people I'm sure people have seen the film Limitless and they're watching Bradley Cooper sitting there trading, trying to make a shitload of money. That's just not trading. It's all about patience and discipline, and it might seem counterintuitive, especially how fast paced it is. But there's such essential virtues, to be successful as a trader, and that's something that I've learned. Allowing things to settle, allowing just that little bit of extra time before you enter the market, because I guarantee if traders, people that listen to this now, if you're struggling with your entries, I guarantee if you just try and be a little bit more patient, maybe wait for a few more candlesticks, and you will see, oh, damn, yeah, that makes sense. I shouldn't have I would have got in there. It's actually gone against me, or it's actually done this. Now I should enter the market. So just implementing a little bit of patience and discipline on that front, I think is key. It goes very far.
100%.
So Ken, sorry, Rod. Can I
go on, Umar?
So Ken, when you're placing a trade, let's say there's a heavy news week ahead, or whatever volatility may be in the markets, right? So when would you how do you approach your entry in terms of, would you wait for news to come out and then wait for price to do what it needs to do, or do you place the trade, I don't know, a bit earlier before news? Like how do you go about it?
So, well, to be honest, sometimes I will have trades still running heading into major events, and obviously I adjust my my risk accordingly. Like if I, for example, just to answer your question, if I have like everything still lined up for me technically and fundamentally, and I know there's a big risk event coming up, I don't trade full risk. I actually trade like a fraction of what I would usually risk. But most of the time, like the ideal scenario for me, if I haven't still got a position running, the ideal scenario for me is just as we were just discussing earlier, was just allowing the dust to settle, and then formulating a view, and then entering the trade post the event. I'd rather enter the trade post event, because you're still, obviously with any trade anyway, bro, whether you're just trading technicals on their own or whatever, it is still a gamble, and it is a massive gamble. I feel, you know, when you're leaving the trade open, because it has, as I said, as we were just discussing earlier, it comes down to market interpretation, and there could be a lot of volatility of interpreting that data release before we get a definitive direction of the market. So my ideal scenario, bro, is waiting post event and then entering.
Yeah, I've noticed the same thing only recently, right? Because I used to place trades just before news or during news, and I used to get wrecked heavily, right? And then I would wait about half an hour after news would come out, or about an hour, just to see what's happening with price. And a lot of the time, like I trade US 30, right?
Yeah.
So a lot of the time, I just start seeing reversals, you know, and then I would just be like, okay, well, maybe my bias wasn't correct. And you only know that, like you said, when you become a bit more patient and disciplined, looking at exactly like, okay, what is the market really telling you, rather than just kind of gambling in a way, right? Like you just said, it is gambling in whatever way you perceive it. In the way, it is still gambling at the end of the day, right? You just have to have your, let's say, your risk in check as well.
That's it. 100. No, you've said that really nicely, bro. Really nicely. And at the end of the day, people got to remember, over being a trader, we're risk managers. If we don't manage our risk, we don't manage our capital, then we've got nothing to trade with. So,
bro, I've learned the hard way, trust me.
Yeah. Oh, we have. All of us have. All of us have.
Ken, what do you need to see and what do you need to feel for you to go max risk on a trade?
I need everything to align. Okay. So I need everything to align. And I'm talking from the top, you know, when I'm looking at monthly, you know, I'm breaking, everything has to align from the monthly to the weekly to the daily to my point of entry on the 4 hour, technically there. And then of course, my themes, like what's going on in the market, you know, the fundamental thing that's driving the market. So I need all that to align. And then like I'm looking typically for 3 confluences technically to enter the market. So everything needs to align for me to go sort of full risk from top technically down to the bottom, and then just fundamentally as well. Yeah.
And what does it feel when you can see everything's aligned? What are you feeling at that point when you're placing the trade?
I just feel ease, you know, ease of in my decision, like confident in the sense of that. Most of my trades, like most of them, don't get me wrong, I'm not going to sit here and lie, I still at times will look at my MT4 and just be like, why the fuck is that going against me? Like, it doesn't make sense. You know, it does. But obviously that thought and that does go through my mind, and that emotionally does. But I don't go and do anything stupid with those thoughts and that emotion. You know, I still stick to my guns, or you know, I will cut the loss if it's not moving in my direction. Sorry, what was your question again? I went off there. I went off on a tangent again.
Let me try to remember it. No, I think my question was, my question was...
No, I think Ken answered it, because you asked him, how does he feel when he takes the trade?
That's it. How did you feel exactly?
Yeah. So when everything's aligned, I just feel comfortable, you know, in a sense of not even needing to worry about it. You know, at the end of the day, we all still subconsciously have a little bit of worry, you know, behind our trade. I know we're comfortable with what we're risking, but we still want the trade to go in our favor at the end of the day. But as I said, it's even with that little bit of worry, or even that little bit of maybe doubt, or whatever emotion comes into your head or thought comes into your head, you just don't act upon that. You keep your, you know, things in check. But yeah, most of the time, it's just when everything aligns, I'm just comfortable. You know, I'm happy with my decision.
What's your opinion on when people say like, oh, trade like a robot? Because personally, I used to think about like, oh, okay, let's try that, and it's just not a real thing. You cannot trade like a fucking robot, you know?
What do you mean?
Like having absolutely no emotions, because it's impossible, you know? I thought at one time like, oh, I can actually trade like a robot, and then turns out no, you can't, because you have some sort of emotions as a human being, right? So
yeah, that's totally impossible. You know, there's always going to be emotion in trading, and sometimes it's good. It's just how we channel it. Like we need a little bit of emotion to get us towards our clear defined goals that we've set out for trading in the first place. You know, and I think that's really a big part of psychology, by the way, guys. A lot of people will come into trading without clear defined goals of where they want to go. They just see someone making money on Instagram or wherever, and it's like, yeah, I also want to make some money, and they're just trading aimlessly. You know, they're making a few £100 here, they're making £1,000 here or whatever, and they're just bouncing around in a realm of just some sphere of not getting anywhere. You know, so it's really important that you write down your goals. Why are you here to trade today? What is it? What is your goal? What are you trying to get to in the next few months or year? And where do you want trading to take you? So that is really key, because whenever potentially you go off course a little bit, you could just sort of recollect yourself when the markets are closed or on a weekend. Regather yourself and remember why it is you're trading and where and how you're going to get there. So yeah, definitely have some clear goals.
No, I love that point, because a lot of the time when people get into trading, and me myself included, I was guilty of this in the past, is that I'd start aiming for money. I'd be like, I need to make this amount of money, I need to make that. And when I stopped doing that, I actually started to understand how to trade, because I was like, actually, trading isn't just about making money. Yes, of course, we do this because we want to make money, but your ultimate goal of what you're focusing on in the process is not the money. It's more so, you know, specific setups, understanding how markets move, how to place a trade, rather than, okay, I need to place this trade to make £5,000. Like, it doesn't work that way, right? So I've noticed with myself is that when I stopped looking at the money, I've actually started to make more money, you know. Whereas when I was focusing on the money, I kept losing money more and more, you know.
Definitely. You know, focus on the process of things, the money will follow, you know, as the saying goes. It does.
That's it. And I had one more question. Well, actually, two more questions. So, Ken, what's your opinion on when people say, like, oh, you need to trade like the banks, da da da? And also, do you believe that the market is run by an algorithm?
Firstly, when people say you need to trade like the banks, it's impossible for you to trade like the banks. These guys have got
Thank you.
These guys have got more capital than you. You know, these guys can run longer in you know, being solvent. You will go insolvent very, very quickly compared to the banks. So it's completely impossible to be trading like the banks do. And the banks, a lot of the times, these guys don't need to have stop losses in play. You do. You know, you're nothing compared to these guys. So get that out of your head. On the second question, what was that? The second one?
So do you believe that the markets is run by an algorithm?
Is what the entire market is run by an algo?
Yeah, like, you know, there's a lot of people that come out. I think I'm not sure if it's, hopefully they don't hate me, but I think it's like the SMC traders that say, like, oh, the markets is run by an algo, right? Like, everything is already there. It's just about what times you're trading, da da da, and all of this stuff. I don't know. There's a lot that goes into it, but there is a saying that, oh, the market is driven by an algo.
Well, I think these guys, I don't know what this sort of witchcraft is of a conspiracy is, to be honest.
What? Some juju.
Voodoo market analysis.
Oh, Lord.
No, for me, I don't know. I generally don't know about that. But what I do know is, what people forget is that, you know, FX, foreign exchange, this is a real thing. It's not just purely speculative. Like, businesses are doing, you know, big transactions in FX. You know, we've got M&A, you know, when businesses are buying other businesses, mergers and acquisitions, or, you know, there's real money flows that are happening in FX, like that people forget. So I don't think it's run by, you know, by an algo at all. But in terms of that conspiracy, I'd probably need to educate myself on it just to understand what they're thinking. Because as I said, I don't really know, to be honest, bro.
There's a really good interview by Omar on Words of Rista when he talks about the clearinghouses and the CLS, the DTCC, and how they settle orders for these institutional clients, and they use an algorithm based on a T1, T2, Tier 3. So I think that's what they're referring to, and this is what SMC ICT community refers to. But again, from your perspective, like you said, there's real M&A acquisition, mergers and acquisitions happening. There's real exchanges between conglomerates from different nations, you know, actually genuinely exchanging one-to-one currency, and we're talking in the billions. So, you know, it's quite a complex question, but from, you know, in your experience, obviously from the fundamentals point of view, you know, it does sound a bit like conspiracy, but yeah, it's just, I've looked into it a little bit. It does make sense, but again, we will never know. That's the problem.
Exactly.
We
No,
will never know, because and they're just accepting that it's almost like you got to detach yourself from trying to know everything. And I think a lot of people want to attach, they really want to know and understand everything, but you can't, especially in life. We're not meant to know everything. And you can still make money and live a really good life without knowing everything.
100%.
So I see that we are coming up to now. I've got a really good question, but it depends on if you guys got a bit of time. You guys got an extra 5-10 minutes?
Yes, all right. That's all good for me.
Yeah. All right. So I want to ask you guys. So Ken, we'll start with you. What is your biggest fear, and how do you handle that in your trading?
In life,
Yeah.
wasps.
What the-
Running away from wasps. No. Well, I am, to be fair. I got PTSD of wasps. But that's a good question. You might have to come back to me on that one, Brad, because I want to give a good answer. So I need to think about that.
Yeah, that's quite deep though. I think maybe just with your trading then, Ken. Forget life, because life's a bit deep in it. Let's just maybe with your trading, what are you most afraid of? I don't know.
When it comes to trading, oof. I think, yeah, well, actually, no, it went through my head actually this morning. My biggest fear is if, for example, you know, like a situation happens where, for example, years ago, we had the SNB, the Swiss National Bank, and they removed the floor on the Swiss franc. And
I remember that day.
a lot of people lost a lot of money. I lost a decent amount of money as well, not to the extent of some of my peers, but I lost a lot of money, and you know, my funds were just unsavable, basically. So my fear is something like that, something that's completely out of my control, and that's why, for me, you know, when I am trading, obviously, I'm trading my own personal capital. Well, I do have private arrangements as well, but I'm spreading my risk across brokers, because regardless of if you're trading with a broker with regulation within your jurisdiction, you're only insured up to a certain amount. And you know, so that's my biggest fear. If a big market event happens and just potentially wipes me out, God forbid, you know, universe forbid, but that's my biggest fear, because it's out of your control. There's nothing you can do about it. And I know you shouldn't fear it, but it's just that I've seen the damage that such thing can cause.
I remember that day. I saw it happening right in front of my eyes. And what I remember seeing is the spreads just went like 30-50 pips, right? If you tried to trade it, you couldn't trade it, even if you wanted to. And then hearing the next few days of what was happening, hearing that not only did traders blow their accounts, but they were in debt.
Exactly.
Like they owed more than their trading capital.
Exactly.
Because the spread was just like ridiculous.
Yeah.
So, and that could happen again, isn't it? It literally, the way I'm seeing like CBDCs and the dollar dying, is just something like this is going to happen.
Yeah.
It's pretty scary. You know, I think that I fear that too.
Yeah, you got me scared now, man.
Bro, imagine you're trading 7 figures in your funded capital, and then the spread just goes like 30 pips. So it just wipes everyone out.
Done. Finished.
How are prop firms meant to survive that?
Yeah, exactly. They won't.
Yeah, I personally feel like, you know, with the whole digital currencies sort of coming into play, and they are going to come into play more and more gradually. Like I think today Putin signed something for the Russian, was it Russian rubles? Is that what it is?
Yeah, Russian ruble.
Yeah. So he signed something to like start a network for a digital currency for his country now. So just stuff like that, and it's happening in different countries too, right? Like the UK was even they've been talking about it for over a year now, I think, right?
That's right. They have.
So,
yeah.
and they
China
can
got it as well.
Yeah, and they can implement this whenever they want. So that's one of my fears, because it's like, if this happens, then what's going to happen to all these other so-called, all these other historic currencies, let's say, right? Like, what's actually going to happen? So
true.
Yeah. True. What's going to happen to the debt? Because if there's a digital currency, how they're going to back it.
How? Yeah, that's true as well.
I think that's we should do a part 2. And
yeah, that is certainly a part 2 discussion.
that's a part
for
2.
sure.
Yeah,
that
talk
is.
CBDCs.
Yeah, will
talk
Forex
the death of the
survive?
dollar. How will Forex survive? Yeah, and I've also hearing on the grapevine about the we were talking about earlier about the algo and clearing houses and everything, but do you know anything about the going to T0? So there's the T1, T2, T3 settlement process, but then apparently in March, I think March 2024, there's going to be this transition to T0, which is like instant settlement for institutions. Have you heard anything like that?
No, I haven't. No, I'm just
Okay.
writing it down now to read into, actually.
Yeah, so if you go to the CLS website,
Yeah.
they'll have like a warning or something. They'll have like an article just mentioning that there's when it comes to currency and equity settlement, there is this transition from tier 3 to tier 0.
Right.
And from speaking to someone that works in settlement, they told me it's a real thing. And in fact, Omar has actually mentioned it. The trade that we mentioned earlier in the podcast. He's done a Words of Wisdom podcast. He's on Twitter. NBB trader, I think he's referred to. But yeah, if you something to research, guys, because if you got open positions in March next year, just be careful, man. Because if there's any sort of like changes to because this is like the pipe work of the markets of how big orders are settled. If there's a change in that, then we need to know about it. So I thought I'll mention that.
Yeah, definitely.
Yeah, that sounds scary. But anyway, let's think of some other topics. So Ken, where do you think stocks are heading? Because I'm hearing we're in a bullish market now. What's your opinion on that?
Well, we do look like we're in a bull market, to be fair. I think, to be honest, I'll have a clearer picture, bro, after Wednesday.
I'm gonna hit you up after Wednesday. All right.
Yeah, hit me up after Wednesday.
So, Ken, where can the listeners find you? And what are you up to these days? Just let the listeners know.
Yeah, just to round off, you can catch me. I'm very active, obviously, on Instagram. Real Ken Chigbo. So obviously, I'm posting a lot of content on there. I've started picking up pace again on the fundamental content, just because I know people love it. And I've got a Discord now.
We just love you, bro, man. That's what it is.
Too kind. Yeah, so I've created a Discord now called the Fundamental Trading Club. It's free, so people can get in there and understand, fundamentals. I'm doing rundowns actually more or less every day.
You've almost hit 1,000 in like a week, right?
Yeah, exactly. It's really nice to see, and it's just for me, like, it's part of my process anyway. So me giving those rundowns is just what I do, when I'm preparing. So just giving that to other people, I like it. I like to see people, more people learning about fundamentals and educating themselves. So yeah,
I have to say, in that Discord, pure value, honestly. Like
just
every day, like the way you break down not just the charts, but also your bias and the reasonings behind your fundamentals and everything is honestly everyone should really be joining that. So it's free. I mean, come on, it's a no-brainer.
Exactly.
You know what I mean?
That's it.
100%. So guys, I've linked those that link to the Discord in the YouTube description. So if you make sure you want to reach out, join the Discord, learn about the fundamentals from the fundamental king himself,
the GOAT.
The fundamental GOAT. So on that note, Ken, I want to thank you. Really appreciate your time today. Umar, you came in as well. I really appreciate you coming. And guys, again, for those listening, there was a lot of gems dropped. Make sure that you replay this, share this with others, and make sure that you're liking this content. Make sure that you're subscribing to Trader Roundup. And of course, reach out to Ken and Umar. Links are in the description below. Thanks very much, guys. Thanks, Ken. Really appreciate you.
Much love.
Take care, brother.